start a new chapter today. Write down heading inventory valuation. A small chapter, maybe in 2 classes, 3 classes should be over. After that we'll start company accounts. Write down the heading inventory valuation. Inventory valuation. So what is inventory valuation? What do you mean by inventory? Discuss all these things later on. Let us first do a problem. Write down a small story. So what is inventory valuation? We will learn through a small case study. Write down. Inventory normally means stock. Stock of raw material, stock of semi-finished goods, and stock of finished goods, loose tools, spares used in the manufacturing or used in the maintenance of the machines, etc. All these things come under the meaning of the term inventory. Inventory means stock. Stock of raw material, work in progress, finished goods, spares and stores which are normally consumed in the production process. Okay. Now, what is inventory valuation? We'll learn through an example. Write down. You, not me, you are the stores manager. You are the stores manager of the Vizag steel plant. Of the Vizag steel plant. Of the Vizag steel plant. Full stop. The company is engaged in the business of making and selling steel. Company is engaged in the business of making and selling steel. Stop. Right now, steel is manufactured from iron ore. From iron ore, I-R-O-N, iron ore, which comes from mining companies, mining, M-I-N-I-N-G, mining companies located in Orissa and Bihar. Located in Orissa and Bihar. So in Bihar and in Orissa, there are mining companies, iron ore mining companies. What is their business, mining companies? You have 2 types of iron ore mining, open cast mining and you can say under the ground mining. Under the ground mining, what they'll do is they'll dig a hole, go inside earth and then start taking out the iron ore. Iron ore is nothing but it's a dark red color mud. Mud will be very dark red color. And out of that they'll make steel. I think you would have seen in television Bellary mines. It's only dust, mud, dark red color mud. And when that mud is cleaned, washed, boiled, you get steel out of it. Okay? So steel rods are not found on any tree or found inside the earth. It's only mud out of which we make all these metals. Is it clear? So where does the mud come from for our company? This mud comes from Bihar and Orissa. Okay. How will they bring the mud? Will they bring it on the heads of the labor to the factory? No. It has to come through goods train only. Right down. The iron ore comes in. The iron ore comes in boxes. boxes loaded in a goods train. Goods train. Each box contains 1000 kgs of iron ore. Is more, so you write 100 kgs. Our story, no, whatever you want, we can write down 100 kgs. Each box contains 100 kgs of iron ore. 100 only. Remove one zero. 100 kgs of iron ore. Okay. So today everything has become very precious. So iron ore manufacturing companies, mining companies, what they do is when they take out the iron ore, they are going to safely pack them in a box because they don't want any of the iron ore to be wasted because it is very precious nowadays. So they will put 100 kgs of iron ore in a box. The box will be loaded in a goods train and the goods will come to your godown. Okay, continue. The boxes are unloaded and arranged in the stores. The boxes are arranged. The boxes are unloaded and arranged in the stores with the help of a crane. With the help of a crane, C-R-A-N-E. It's very difficult for people to lift such heavy boxes. We take the help of a crane which is going to unload the boxes and put it in the godown. Okay, continue. Whenever the production department sends a material requisition, whenever the production department sends a material requisition, whenever the production department sends a material requisition, boxes are sent to the production department. Boxes are sent to the production department with the help of a crane. With the help of a crane. So whenever the production department says, stores department, please issue us material, we want it for production of steel. So our responsibility is whenever they send a request, you have to send those boxes to them. When they don't want it, they will be kept in the stores. When they want it, we'll issue it to the production department. Okay? Continue. So for anything, whether you want to put it in the godown or when you want to issue it, it will happen only with the help of a crane. Continue. These were the transactions that took place in 2014. These were the transactions that took place in 2014. January. You write point by point now. Take a fresh line and write January. Purchased 10,000 boxes at the rate of 100 each. We have purchased how many boxes? 10,000 boxes at the rate of 100 rupees each only. So one box costs us only 100 rupees. Okay, next. February. Purchased 20,000 boxes February purchased 20,000 boxes at the rate of 200 each. At the rate of how much each? 200 each. Continue. March. Issued 5,000 boxes to the production department. Issued 5,000 boxes to the production department. April. Issued another 5,000 boxes to the production department. May. Purchased 10,000 boxes at the rate of 300 rupees each. May purchased 10,000 boxes at the rate of 300 rupees each. June. Issued 5,000 boxes. June. Issued 5,000 boxes. July. Issued 5,000 boxes. August. Purchased 20,000 boxes at the rate of 400 each. You understand the trend? August purchased 20,000 boxes at the rate of 400 each. Next, September. Issued 10,000 boxes. October. Issued 20,000 boxes. October. Issued 20,000 boxes. 20,000 boxes were issued in October to the production department. November. Purchased 10,000 boxes at the rate of 500 each. I am doing inventory valuation. Purchased 10,000 boxes at the rate of 500 each. November. Okay. December. Issued. How much? 20,000. No, 10,000 boxes only. December. Issued 10,000 boxes. Full stop. Okay. So we'll again run through the numbers first. January, what did you do? Purchase 10,000 boxes for 100 rupees. February, purchase 20,000 boxes at the rate of 200 each. March issued 5,000 boxes. April issued 5,000 boxes. May purchased 10,000 boxes. Okay. Then June issued 5,000 boxes. July issued 5,000 boxes. Then August purchased 20,000 boxes. Okay. At 400 each. 400. Okay. Then September issued 10,000 boxes. Then October issued 20,000 boxes. November purchased 10,000 boxes. December issued 10,000 boxes. Is it clear? Now go through those transactions and tell me how many boxes should be left in the godown first of all. Just add up. Add all receipts, subtract all issues, find the balance. 10,000 boxes?
Yes.
Pakka? So easy. But there is some masala to be added. Continue. On 31st December, the accounts manager requested the stores manager to furnish the value of closing stock. In order to prepare final accounts. I think closing stock of raw material is required, no? Manufacturing account, you want to know raw material consumption. Unless you know opening stock, closing stock, purchase, you don't know what is the consumption of raw material. And closing stock also has to be shown in the balance sheet. So to prepare final accounts, he has asked you to do what? Furnish the value of closing stock. Okay, continue. The stores manager goes to the godown or goes to the stores and walks through the godown, walks through the stores. He's walking in the stores. While walking, he notices few boxes of January batch. So few boxes he can find with paint written January batch. Few boxes from February batch. Few boxes from May batch, August batch and November batch. He starts running towards the cranes. And finds that it is under repair. He starts to tremble with fear. Of losing his job. You able to understand what has happened? So he was walking through the godown and he saw like this, he saw a few boxes from January batch. And he saw like this, he saw a few boxes from February batch. While he was walking, he noticed few boxes from May batch. He noticed few boxes from August batch. He also noticed few boxes from the latest November batch also. Then he starts running towards the crane. And he finds that the crane is under repair. It will take at least 10 days for the crane to be repaired. So he is now shivering with fear that he may lose his job. Why will he lose his job? You are not able to understand his fear. I'll tell you why. I have to tell you one more small story to understand his fear. Suppose, very simple story. Suppose you are running a stationery business. Okay? During the year, you purchased 100 Reynolds marker pens. This is Camlin. 100 Camlin marker pens for 20 rupees each. 100. Cost price 20. At the end of the year, 20,000 pens are unsold. Sorry, not 20,000. It's only 100 numbers. 20 pens are unsold. Tell me what is the value of your closing stock. You purchased 100 pens at the rate of 20. Now out of 100, how many are left? 20 are unsold. So what is the value of closing stock now? 20 into 20, it is 400. Okay, very easy. I'll add some complexity now. During the year, you purchased 100 Reynolds pens, 20 rupees each. You also purchased 100 Camlin pens, 30 rupees each. 100 Reynolds pens, different type, 20 rupees each. 100 Camlin pens, 30 rupees each. Reynolds pens 20, Camlin pens 30. 100 you bought. At the end of the year, 20 Camlin pens and 20 Reynolds pens are unsold. What is the value of closing stock? 20 Reynolds pens, 20 into 20, 400. 20 into 30, 600. Total value of closing stock is 1000. I'll add some more masala. During the year, you purchased 100 Ad Gel pens. Ad Gel pens cost 50 rupees each. You purchased 100 Parker pens of 100 rupees each. 100 Ad Gel pens, 50 rupees each. 100 Parker pens, 100 rupees each, and 100 Luxor pens, Luxor, Luxor pens, 30 rupees each. At the end of the year, 20 Ad Gel pens, 20 Parker pens, and 20 Luxor pens are unsold. What is the value of closing stock? 20 into 50 Ad Gel pens. 20 into 100 Parker pens, 20 into 30 Luxor pens. How much? 20 into 50 is 1000. 20 into 100 is 2000. 2000 plus 1000, 3000. And then 20 into 30 is 600. 3000 is the value of closing stock. Is it clear? So it was very easy for you. I told you how many different types of pens were purchased. What was the cost price? I gave you and I told you out of each type how many pens were unsold. I told you that. So it was very easy for you to calculate the value of closing stock. Yes. Now read the problem and tell me how many boxes of January, how many boxes of February, how many boxes of May, how many boxes of August, and how many boxes from November are remaining unsold. How many? He saw a few boxes with January paint. He saw a few boxes with February painted on them. He saw a few boxes with May painted on it. He saw recent boxes also. So now tell me exactly how many boxes of January, February, May, August and November are there in the godown. Exactly. Now if you have to do that, what you have to do is with the help of the crane, You have to keep all January boxes in one corner. Search for January boxes first of all in the godown. Searching is not easy. The boxes are very, very big and heavy. You cannot move it. And the boxes are stacked. Stacked means one top of, we'll put the box on top of each other. So it's not so easy. So with the help of a crane, you have to put all January boxes in one corner. Then February box in one corner. May box in one corner, August box in one corner, November box in one corner. Then count those boxes to arrive at the value of closing stock. Yes, but for doing that crane is required. But what happened to crane? It is under repair. For how many days it will not be come back to action? 10 days. Now if you don't give the information within 2 to 3 days, no, the management will take action against you. Because of you, the finalization of accounts will get delayed. They'll remove you from the job. That is why he is shaking with fear. He knows that his job is now under risk, danger. Now, what will you do to help him? Can you suggest him any support or any help? What mistake did he do or else? Some mistake happened.
He issued the boxes randomly.
Yes. The boxes were issued randomly. The boxes were not issued in any particular order. All boxes were done khichdi in the godown, mixed up, and whatever boxes were near we have issued, that's it. Without following any order, we have issued the boxes. If you would have issued boxes in some order, no, he would have known what boxes are left, what boxes are not left. He has not followed any order at all. So now how do we solve the problem now? He counted, not possible. That's what I am saying. Sometimes boxes are stacked under a big, we can say you are doing it in columns. Sometimes there are 3-4 columns stacked together. You don't know what is there inside that column. Or they are stored in the form of a pyramid. What will you do? If you remove one box, the pyramid will fall on you. And you will die. What will you do now? So we have to give an assumption. We have to make an assumption. Actual issue is done in no order. We have understood. Actually, metal has been issued in no particular order. We have to make an assumption that the boxes were issued in, first out order. Assumption. So when the stores manager goes to the accounts manager, tells him his problem, the account manager says, don't worry, whatever mistake you have done. Forget about it, don't tell about your mistake to anybody. I'll give you a chitka. I'll give you a suggestion. The suggestion is, you assume that you have followed FIFO assumption. You have followed FIFO, first in, that means before finishing the old stock, you have never issued the new stock. You make an assumption in your mind, don't tell to others what you have done actually. Tell to others that without finishing the old boxes, I have never touched even a single box. Only latest boxes are there in my godown. Because nobody is going to come and inspect the stores. So keep whatever you have done to yourself. Follow an assumption. What is the assumption you are going to follow? First in, first out assumption. So what is first in, first out assumption? The stock which came first into the godown will be issued first. The stock which has been recently purchased will not be issued first. Without finishing old stock, you are not going to touch the new stock. That is called as FIFO method. Now, using this assumption, we have to calculate the value of closing stock. Now, can you tell me, after making this assumption, these 10,000 boxes are left out of which batch? November batch. Why November batch? Latest, because all old stock would have been issued. These 10,000 boxes are left out of latest purchases. Which were the latest purchases? November. So it is very easy to arrive at the value of closing stock once you make this assumption. But we have to learn how to prepare the stores ledger under the FIFO method for valuation of closing stock. Please do it along with me. Write the heading. Stores ledger. FIFO method. First in, first out. See, at our home also we follow FIFO assumption. Curd. We are from Andhra Pradesh where we love our curd. So, in the afternoon you get fresh curd. In the evening, your mother will make you to eat the same. If some curd is left in the afternoon, you will be made to eat that curd and finish it. Next day morning again you will get the, next afternoon you get the fresh curd. Even if in the night, if fresh curd is available, she will not provide it to you. Why? Because we will eat away that fresh curd also and then we will throw remaining into the dustbin. We follow that. First in, first out method. So without finishing old stock, we don't use the fresh stock. After this chapter is over, no, I'll discuss company accounts. Yesterday I discussed joint life policy, death of a partner. You were not present yesterday. Let us start. This is the format. Date, particulars, receipts, issues, balance. Under receipts you have 3 columns: quantity, price, amount. Under issues you have 3 columns: quantity, price, amount. Under balance also you have 3 columns: quantity, price and amount. Let us quickly finish the problem. Please do the problem along with me. Don't lag and don't lead also. January purchases. Quantity, how many boxes? 10,000 boxes. Price 100. Amount 10 lakh. Issues, no issues. Balance 10,000 boxes, 100 rupees each, 10 lakh. Draw and underline. Do it. You already know it. Do it in FIFO, LIFO, weighted average. Next. After January, what is the next date? February. Again, what do we have? Purchases. What do we have? Purchases. How many boxes? 20,000 boxes at the rate of 200 each. Not 20 lakh, 40 lakh. No issues. Balance. Now, look at the board, everyone. While we are writing down balances, we have to maintain a queue. When you get into a bus, you maintain a queue. When you are purchasing tickets for a movie, you stand in a queue. Similarly, the stock balance will also be shown in the form of a queue format. Old stock you should write first. 10,000, 100 boxes, 10 lakh. Then 20,000 boxes, 200, 40 lakhs. $20,000 boxes, 200 each. 40 lakh rupees. The first man standing in the queue for ticket for a new movie. The man behind him standing for the ticket. What's the latest movie that is going to release? When? Release. How is it? Good. Particulars. Issues. How many units? Look at the board now. We have to issue 5,000 units. Now we have two options. Old stock, new stock. We are following which method? First in, out of both stocks, which came first? Which came first into the godown? Old stock. Old stock has to be issued first. So 5,000 boxes has to be issued out of this balance. 5,000 boxes, rate 100, 5 lakh. Balance, look at the board. Out of 10,000 boxes, 5,000 boxes have been issued. Balance is 5,000 boxes, 100, 5 lakh. 20,000 boxes, 200, 40 lakh. This was issued out of this stock. Balance is left here. April. What in April? Issues. How many boxes? Now, which box will you issue? Old one or new one? थोड़ा ही चैनल छोड़ देंगे, ये वाला issue करेंगे. No mercy. Without finishing the old stock, we are not going to use the new stock. 5,000 boxes, 100 each, 5 lakh. Balance, 20,000 boxes, 200 each, 40 lakhs. After April, next May. Receipts or issues? Receipts, purchases. How many boxes? 10,000 boxes. At the rate of 300 each. 30 lakhs. No issues. Balance. Old stock first year credit. Old stock first year credit, then below that new stock. We completed June. Issues. How many boxes? 5,000. Now look at the board. Old stock, new stock. Old stock, new stock. Old stock, new stock. Which stock will you issue? Old stock. At what price? 200 each. Ten lakh. What is the balance left now? 15,000 boxes, 200 each, 30 lakh. 10,000 boxes, 300 each, 30 lakh. I'll continue on this part of the board. Or should I rub this and continue? I'll continue here. Date, particulars, receipts, issues, and balance. Quantity, price, amount, quantity, price, amount, quantity, price, amount. So we have finished up to June now. July. What do you have in July? Issues. How many boxes? 5,000 boxes. Now see, old stock, new stock, old stock, new stock, old stock, new stock. Which stock should I issue? Old stock. 5,000 boxes, 200 each, 10 lakh. Balance, 10,000 boxes, 200 each, 20 lakh. New stock, 10,000, 300 each, 30 lakh. After July, August. Purchases. How many boxes and what? 20,000 boxes. At what rate? 400 each. 80 lakhs. No issues. Now we have three types of stocks in our godown now. Old stock, new stock, latest stock. 10,200, 20 lakh. 10,300, 30 lakh. And 20,000 boxes, 400 each, 80 lakh. September. What happened in September? Issues. How many boxes? 10,000 boxes. Now see our option. Old, little old, latest. Oldest, old, latest. Which one should I issue first? Oldest stock. How many boxes? 10,000 boxes. जो लाइन में पहले खड़ा होता है उसी को पहले टिकट देना ना. Whoever is standing first in the queue, he should get the ticket first. The last guy gets the ticket first, we call it as black ticketing. We'll discuss that when we come to LIFO method. Last in, first out. What is the balance stock now? 10,000, 300, 30 lakh, 20,000, 400, 80 lakh. October. Issues. How many boxes? 20,000 boxes. Now see, look at the board. Old stock 10,000 boxes. New stock 20,000 boxes. How many have to issue now? Can we issue these 20,000 boxes? Without finishing old stock, you cannot touch new stock. You cannot say I want to issue 20,000. This is exactly 20,000. So issue it first. You cannot do all those mischiefs. Finish old stock, then consume from new stock. So we have to issue the old stock first. 10,300, 30 lakh. But is it sufficient? You have totally issued 20,000 boxes. So these 10,000 boxes are over. Now out of these 20,000 boxes, we will issue 10,000 boxes. $40 lakhs. How many are left now? 10,000 boxes, 400 each, 40 lakh. Look at the board. Entire 10,000 issued. Out of 20, another 10,000 issued. Out of 20, 10,000 issued and 20,000, 10,000 is left in stock. November. Now what do we have in November? Purchases. How many boxes at what rate? 10,000 boxes at the rate of 550 lakh. No issues. Balance. Old box first. 10,400 boxes, 400 rupees, 40 lakh. Another 10,500 boxes, 50 lakh. December. Issues. How many boxes we are issuing in December? Old stock, new stock. Which stock should I issue? Old stock. This is how we find the value of closing stock. 10,000, 500 and 50,000. Sir, even without preparing the entire chart, with our logic it told you the answer. But still you have to learn how to maintain the stores ledger. Excise Act requires you to maintain the stores ledger showing daily balances from each batch, how much balance is left. You have to maintain batch wise details. You should know how a stores ledger account should look like. Okay. Now we'll learn the other assumption. LIFO method, last in, first out method. Okay. So what is my last in, first out method? Without finishing the latest stock, we are not going to touch the old stock. Black ticketing. The guy who is standing first in the queue since midnight, he is not going to get the ticket. And the guy who has come just half an hour before the show, he gets the ticket.
Legal, sir.
Huh?
Legal.
Illegal. Book my show is FIFO only, not LIFO. Okay. So at Diwali, there are old sweets at home and new sweets at home. Which one will you eat first? New one. Who will eat the old one? Throw it into the dustbin. Or let it be there. Once the new sweets are over, then we'll go to the old sweets. If they are of good quality till then. Or else we'll get a stomach ache. Let's do the stores ledger. LIFO method. Quickly finish the problem. Date, particulars, receipts, issues, balance, quantity, price, amount, quantity, price, amount, quantity, price and amount. But with crackers we will not follow that. Crackers, finish old crackers first, then touch the new crackers. Or else mother or father will break your leg. Let's say you are wasting money. Let's do it quickly now. January, please be quick, tell me the numbers. January, purchases. How many boxes? 10,000 boxes at the rate of 100 each, 10 lakh. No issues. Balance, 10,000 boxes, 100 each, 10 lakh. There will be no change in the manner in which the queue is maintained. The order in which material is issued will change. Q same way will maintain. February. What do we have? February. Purchases. How many boxes? 20,000 boxes at the rate of 200 each. 40 lakhs. No issues. Balance. 10,000 boxes. 100 each. 10 lakh. Old stock. New stock. The way you write the balance will not change. It will remain the same. March. March. What do we have in March? Issues. How many boxes? How many boxes? Old stock, new stock. Old stock, new stock. Old stock, new stock. Old stock, new stock. We are following what? LIFO method. Without finishing new stock, we are never going to touch our old stock. So whenever we are issuing, we will search for latest stock in the godown. Issue that first. Once the latest stock is over, then come to the next latest stock. Once all the latest stock is over, then you go to the oldest stock. So how many boxes are issuing now? 5,000 boxes. From which stock? New stock. Balance. Old stock remains as it is. Balance stock 15,200. Next, after March, April. What do we have? Issues. How many boxes? 5,000 boxes. Again, old stock, new stock. Old stock, new stock. Latest stock first you have to issue. So out of 15, 5,000 has gone and 10,000 is left. Next, May, purchases. How many boxes purchases? 10,000 boxes at the rate of 300 each, 30 lakh. No issues. Balance. Old stock first, after that the next old stock, and then you have the latest stock. After me, June. Issues. How many boxes? Now where from will you issue? Old, oldest, old and new. Latest stock you have to issue. How many boxes? 5,000 boxes? 5,000 boxes from this stock. Balance. Imnesh, you are with me or you are awake? July. Date, particulars, receipts, issues, balance, quantity, price, amount, quantity, price, amount, quantity, price and amount. July. What do we have in July? Issues. How many units? 5,000 units. At what price? Look at the board. You have three options. Oldest stock, old stock, new stock. New stock have to issue. Balance. After July, August. What do we have in August? Purchases. How many units? 20,000 units. 400 rupees each. 80 lakh. Next, after August, what do we have next? September. What do we have in September? Issues. Now we have old stock, little old stock, latest stock. Out of which stock we have to issue? Latest stock. How many units? In September? 10,000 boxes. September is over. October, what do we have? Issues. How many boxes? Now we have three options. Oldest, old, latest. We have to go from the reverse direction. Latest first. After that, this becomes latest. So you have to issue both of these stocks. 10,440 lakh. Then 10,220 lakh. How much is left? 10,000, 100, 10 lakh. This is the oldest stock which was purchased in January, which has not been issued at all. November, what do we have in November? Purchases. How many boxes? 10,000 boxes at the rate of 500 each. 50 lakhs. No issues. Balance will be 10,000, 100, 10 lakh, 10,000, 500, 50 lakhs. December. What do we have in December? Issues. December we have issues. How many boxes? Old, new, old, new, old, new. If you issue old first, you are following FIFO method. If you are issuing new first, you are following LIFO method. So we are following LIFO method. So under FIFO method, value of stock was 10,000 units at the rate of 500, 50 lakh. Under LIFO method, value of stock was 10,000 units, 100 rupees, 10 lakh. There is a huge difference between the value of stock under FIFO method and LIFO method. Is it clear? Now we will discuss what do we mean by inventory. What do you mean by inventory? Accounting Standard 2 on inventory valuation defines inventory as property held for sale in the ordinary course of business. Property A, held for sale in the ordinary course of business. B, property in the process of production for such sale. C, held in the form of materials or supplies to be consumed in the production process. This is the definition of inventory given in Accounting Standard 2 issued by the ICAI with respect to inventory valuation. What is the definition? Inventory is property A, held for sale in the ordinary course of business. You are holding some goods for the purpose of selling it to customers. Example, finished goods. Why do you hold finished goods? You want a customer to come, then you want to sell it. So it is held for sale in the ordinary course of business. Second, B, property in the process of production for such sale. That means in your factory you will have some stock of semi-finished goods. Why are you holding stock of semi-finished goods? After some time you want to convert them into finished goods and then sell it to the customer. So stock of semi-finished goods is in the process of production to get ready for such sale. 3. Property held in the form of materials or supplies to be consumed in the production process. Raw material, supplies. In a big manufacturing organization, they will consume lot of diesel, lubricating oil, cotton waste, small nuts and bolts. Not only that, coal sometimes for heating. So all these things are called as supplies. See, when you manufacture steel, the steel is that iron ore mud. It is mixed with some chemicals and it is boiled in a boiler. The boiler is heated with the help of coal. Coal will not form part of output, but without the help of coal, steel cannot be produced. With coal, we manufacture cement. Limestone is heated with the help of coal, but coal doesn't form part of cement. Coal is used as a heating agent. So it is consumed in the production process, may or may not become part of output. So material which are held for consumption in production process, or supplies which are going to be consumed in production process, they are also part of inventory. Loose tools also. In your factory, your workers, while manufacturing goods, they will use some tools. Those tools will also be part of inventory. Is it clear? So what is inventory? Property which is held for sale in the ordinary course of business, or property which is in the process of production for getting ready for sales. C, which is in the form of materials or supplies to be consumed in the production process. Includes loose tools also. Is it clear? This is the definition of inventory. Now, inventory should be valued at cost or NRV, whichever is lower. Now, why should I value my inventory? Why should I put a value to the inventory? I am trying to find out the value of closing stock of raw material. Why? What is the objective of inventory valuation? Why should I find the value of inventory, closing stock of goods? Matching concept. You remember, sales minus cost of goods sold is gross profit. Sales Sales is revenue. To it you match cost of goods sold to calculate profit. If you have sold 100 units, revenue from 100 units, cost of those 100 units has to be matched to revenue to calculate profits, gross profits. Now, how do you calculate cost of goods sold first of all? How do you calculate cost of goods sold first of all? Opening stock of finished goods, add purchases minus closing stock. Unless you know the value of closing stock, you cannot calculate cost of goods sold. Without calculating cost of goods sold, you cannot calculate gross profit. Are you able to understand? For matching cost with revenue, to match cost of goods sold to revenue, you need to calculate cost of goods sold. For calculation of cost of goods sold, we need the value of closing stock. That is why we have to value inventory. Not only that, inventory is an important item in the balance sheet also. Remember, land, building, machinery, furniture, vehicles, fixtures, computers, after showing all fixed assets and after showing all intangible assets, we come to current assets. Current assets major item is stock. Stock means stock of raw materials, stock of work in progress and stock of finished goods. For trading organizations, more than the asset value, the stock value will be more. To go to a kirana shop wala, he is doing business in a rented premises. He will not have building, but the major asset he has is stock. So, if you take any retailer, Big Bazaar you take, they are running business in a rented premises. The building value will be nil for them, but the stock value will be very, very high for them. There are certain organizations where stock is a major item in the balance sheet. If you show the wrong value of stock in the balance sheet, what will happen? You are misstating your results. You are misstating your financial position. You are lying to your shareholders. You are lying to your investors. To show correct financial position, inventory has to be properly valued. Is it clear? So to achieve these objectives, one, to calculate profits, we need to value inventory. Then to show correct financial position, you should also show inventory properly. Inventory also has an impact on your working capital. What is working capital? Circulating capital. Suppose, if you see the balance sheet of a company, you see lot of stock there. Now, if I see lot of stock in the balance sheet of a company, I will feel that this company will have always cash to pay salaries, to pay taxes, to pay rent, to pay electricity bill, to pay telephone bill. Why? If they have a lot of stock, we know that after some time that stock will be sold. Once it is sold, money will be collected. Paisa, money will be collected. And out of that money they can keep making their payments. So liquidity position, whether the company will have liquid position, liquid cash in their pocket or not, will also depend upon the stock which they have in the balance sheet. If they have good amount of stock in the balance sheet, that means definitely they will have good amount of cash also after some time. Because after some time, goods will become receivables. Goods will become debtors. Debtors will become bills. Bills will become cash. So if you can see good amount of stock in the balance sheet, that means we can be sure that this company has good liquidity position. We can say they have good working capital situation. If you don't find any stock at all, you don't find stock, you don't find receivables. What does that mean? The company will not have money to make the payments. They are looking at somebody to give them stock so that they can start doing their business. Inventory has an impact even on your working capital. Is it clear? Now, if I increase the value of closing stock, can you tell me what will be the impact on profits? What will be the impact on profits if I increase the value of closing stock? If I increase the value of closing stock, what will happen? Profit will increase. Why? Closing stock is shown on the credit side of trading account, income side. If I increase the income, automatically profits will increase. But opposite impact will be there in the next year. Same closing stock will go and sit on the debit side, expense side of the next year's trading account. If that happens, what will happen? If opening stock value is increased, automatically profits will decrease. So if we increase the value of closing stock of the current year, profits of current year will be overstated and profits of next year will be understated. Similarly, if I reduce the value of closing stock this year, what will happen? Profit of current year will be understated, but what will happen? The same closing stock will become opening stock for next year if you understate the value of opening stock, what is going to happen? Opening stock is shown on the expense side. If you show lesser expense on the debit side, automatically profits will be overstated. Is it clear? So in tomorrow's class, we'll discuss few more methods of inventory valuation. That is weighted average price method, simple average price method, adjusted selling price method, and we'll do some problems, bits also from the textbook.